Hello, everyone. Welcome to another episode of Innovation Spotlight podcast. And I'm happy to welcome here Peter Maslík from Investown. Hi.
Hi, thank you for having me.
Peter is a COO and co-founder of Investown, a platform that, as you say, makes people and businesses more wealthy. What does it mean?
We were thinking a long time about our mission statement and what it should be. And, in the beginning, we were trying to circle around things like, what is it that we actually do? And especially here in Europe, I feel like sometimes we shy away from the topic of money, talking about it, even when we're talking about investment companies. But we really wanted to get to the point, and that's what we do. For the businesses that bring us their projects, we make them wealthier because they can build their real estate developments faster. For the people that invest in the projects, it's pretty self-explanatory. Safe and great profits for them, so also making their life wealthier. And then when it comes to money, that's the great thing. When you have it, you get to do whatever you want with it. So it's not really just about fattening your wallet. It's more about allowing you to do whatever you want with your life.
Mm-hmm. Okay. Can you shortly introduce company itself, how it works, and what does it offer to users and to companies and etc.?
Of course. So Investown is basically a platform. Think of it kind of like a marketplace. On one hand, you have real estate developers that come to us asking for funding for their projects. So they want to build, a new parking lot. They want to build a new residential building. They want to renovate their hotel, et cetera, et cetera. And they're looking for quick funding. They come to us. If the project successfully completes our risk analysis, we put it on the platform where our investors that are there from the other side of the marketplace can invest in the project, successfully fund it. We take the money, we send it to the real estate developers, and then they repay us the loan. We distribute that between the users that invested in it, of course, with a healthy interest.
Mm-hmm. Okay. So you finance it with the money from your investors?
Correct.
And you have also your own funding there, or?
No. According to the European regulation, we are not allowed to participate in any way. We are just the facilitator of this whole business.
Okay, so you don't even have any loans or anything from the banks?
No, we don't.
Okay, so everything is owned by the investors.
That is correct. There's only two participants: the side that is getting funded, the real estate developers, and our investors. We are just the middleman.
Mm-hmm. Okay. And how did you come across Investown? When did you start working there or working?
I started really shortly after Alan and the rest of the co-founders put the team together. I joined as a co-founder very shortly after launching. How I got there is I've just moved to Czech Republic. I've finished my startup in London and was looking for a new project, was looking for something that, first of all, was within my niche. I'm a fintech guy through and through. I think I spent only 3 months outside of fintech startups in my whole career.
Okay.
So I was definitely looking into fintech, and I was looking for somebody that does something that speaks to me. This project sounded like, first of all, a lot of fun, and it also sounded like something that can really change the landscape of investing here in Central and Eastern Europe. Crowdfunding is not really a new concept. When you look at the US or UK in the West, this works for a couple of years now, but there's no company that does it really well here in the Czech Republic or Slovakia or the rest of Central and Eastern Europe.
Mm-hmm. Okay, let's take a look a bit at London and your time there. What was your startup about?
We were working in the financial sector. We were doing Forex retail education, and a major part of our business was providing trading servers to investment banks and to trading companies for their algorithmic trading.
Mm-hmm. Okay, and why did you stop working on it?
Well, I mean, it was time for me to cash out a little bit. First of all, second of all,
so successful ending.
Yes, quite. You could say that. Yes, and then second of all, I've been in that business for over 5.5 years, and I think it was just time for me to move on. We don't sell the business as a whole. It's still going strong, and the guys are doing great things with it. I still catch up with them from time to time, but for me personally, I felt like it was the time to move on.
Yeah. Okay. And what is now your role in Investown? What do you do there?
So as you mentioned, I'm the COO. Basically, what that means is I'm running the day-to-day operations. I'm trying to allow Alan, our CEO, to focus on the long-term vision and to be face in front of the company. Basically my day constitutes of working with team leaders, making sure we're hitting the KPIs, making sure we set our goals right, and just generally making sure that everything runs smoothly within the organization.
How many people do you have in team now?
I think there's around 50 of us right now.
Oh, departments like everything, marketing, sales,
Yeah, so we've got
development.
legal, marketing, sales. Of course, a big part of what we do is, analyzing the risks for our investors. So financial department and risk department, very important for us as well.
Okay. When you were starting with guys, there was in the beginning there's some initial idea of doing this in creating Investown. How difficult it was to sell it to the other people, to maybe VCs or to I don't know, other people who you need to work with, or to banks, or to actually investors itself, because you need to attract investors, then you need to attract developers. So how was it in the beginning for you?
There's a lot of moving parts. As I said, you need to attract a lot of people. I think the key area of every successful startup, or of every startup really, is selling your vision first. It's super crucial because you don't really have money. You're not funded yet. You can't pay people massive wages. So you need to sell them on your vision. You need to gather people that believe what you believe around you. And, you need to rely on them the same way that they rely on you to make that vision happen. Once you get the strong team going, it's quite easy to sell it to the public. If you really believe your mission, it's also much easier to sell it to the VCs and to all your business partners. But definitely starting with, selling your vision to the rest of the team.
Did you already have something developed, like the platform, or it was just a PowerPoint presentation?
No, it was just a prototype. So it was like a clickable mock-up type of thing, and then a really nice PowerPoint presentation.
And did you miss something that you could work with, or would you prefer to have something done, or it was just too soon and it was not necessary to have?
It's not really that. It's that we didn't have the money to develop that. It's,
okay.
So we did the least amount that we could with the budgets that we had ourselves. And then we took that and we tried to, generate more funding from that.
For how long have you been trying to generate funding? Like how many months or?
I can't say exactly how many months. I can tell you this: it was more than 600 VC meetings and pitches. So it really takes a while, especially in early stage when we're talking pre-seed funding. You are looking for a VC that really invests in you as a founder, rather than your idea or the market potential or the pitch deck really. So you need to convince them that you are the guy to do the job in the first place. And then after that, of course, your business plan needs to make sense.
In the beginning, it was 3 of you, or how many co-founders?
In the beginning, there was 4 of us. Now there's 5 of us.
5 of you. And how did you split your shares?
You know what? This is a big topic when it comes to startup founders all the time. Some people just do a series of 2 co-founders and they split everything 50-50. As we mentioned before, is the worst thing you can ever do.
Why?
You know what? Because first of all, it creates, assuming that both of your shares have the same voting rights, then you are stuck in an impasse if you don't agree on something. And then second of all, you are really reliant on one person. So if that person decides that it's time to go on for them and it's time to move on, they want to cash out, or you want to move on and cash out and they don't want to, it creates a lot of problems and a lot of friction. So I don't think it's anything bad, to say, okay, let's sit down, let's see what I bring to the table, let's see what you bring to the table, and according to that, we split, the funding. The funding, the shares.
Do you somehow look at the person who is the leader, that the leader should have more, or the technical guy who does the background has to get more, or how do you sort it out?
It's not really about who does what. It's about what you bring to the table. So what I love about startups is startups are the closest that you can get in professional career to meritocracy. Whoever does the most, whoever brings it to the table the most is paid the best when it comes to shares, So let's say that you come to the table and you've got an idea, you've got an investor lined up, and you have 2 or 3 guys that you can hire right away as soon as you get funding. And there's another person that comes to the table and, they bring their expertise, their skill set, obviously, but they don't bring any investors with them or any other hires. Obviously, that other person can't be, evaluated the same as the first person, because that person just brings more to the table.
Yeah. You mentioned you had 600 pitches, let's say.
Something like that, yes.
Something like that. Would it be different if it was only 2 of you or 1 of you, or how VCs or how angel investors look at these startups if you have more founders?
You know what? They get surprised quite a bit. They're like, "Oh, wow, you're 4 or 5 founders. That's a lot. Usually we see 2 or 3 guys or solo founders." But I don't think it hindered us in any way. I don't think it's something that they look at in the wrong light. It just they are obviously curious how we split the shares and how it works internally, but it's the same thing as when you are raising, for example, Series A or B. They also want to see the cap table. They care about how much how many shares or how much of the company you gave out to previous investors. It's sort of the same thing.
Could it be also that you had the advantage that there was 5 of you, like
In some
bigger team, and
In some ways, definitely, and since the beginning, we've put together a really great team of dedicated people and experts from the industry. It goes back to the vision, right? So I think mainly Alan did a great job selling the vision to the others and really making them believe that this is the way to go and this is the company to work for. Because a lot of our early staff took massive pay cuts from their previous jobs, from their careers, and they just exchanged that money for shares and started working with us.
Okay, that's nice. Well, another question I have is like, do you think that you could also sell like a bad product, to like pitch the bad product and sell it? Because now we see that InvestTown is a good product because it has customers, it has revenue, you have like really nice turnover and everything. But could you somehow sell the bad product to the investors and get away with it? Or are there any breaks or any stuff that
Right.
can
So
happen?
I mean, I think the biggest question is morality, right? Like, first of all, you should never try to sell a bad product to investors because VC world is a small place. They talk, and as soon as it gets out that you are the guy who tries to go around and scam people, you're done for. Not even talking about the fact that it's just morally wrong and, we shouldn't do it just for the sake of it. But another thing is, obviously you can, and we've seen that in recent years, investors can get greedy sometimes. I don't know if you're familiar with the case of Elizabeth Holmes and Theranos.
Yeah.
She basically sold a complete sham to investors, raising billions of dollars. Same thing was with FTX, who raised capital from Sequoia, one of the highest regarded VC funds ever. They gave them $150 million without opening their books. So, once this starts happening, once investors get FOMO and they really want to get on board with you, they don't really ask too many questions. In the beginning, of course, when you're talking pre-seed and seed rounds, it is harder to sell, bad products. Not impossible. I just don't think that's the way to go, especially not long term, because eventually it will catch up with you. Sure, you might run the startup for 4, 5, 6 years, but eventually it's gonna catch up with you, and then you're done.
You mentioned pre-seed, seed, and Series A, Series B. In what stage is InvestTown now? And can you somehow tell me a bit about the history, how you went from stage to the another stage? What was maybe crucial for you to jump from one to another?
Right. So for every startup, the most crucial is the first funding round. That's the pre-seed. In that stage, basically, VCs invest in you as a person, less in the company, less into the business plan and market potential. But you need to prove that you are the guy that can take this all the way. Second, you go for the seed round. That's when you should already have something in place, like a product or first traction from the market. So in our case, the pre-seed we did with Lighthouse Ventures, which is a fund that's backed by the European Union funding, and then with the seed round we did with Česká spořitelna with their CVC seed starter. At that point, we already had some traction. We already had people pre-signing up to InvestTown. We generated a lot of interest on the way. So they gave us money basically to kick things off, to start buying up first marketing spaces, to hire more team, and to really beef up the product. After that, we did the post-seed, which was with a company called Chytrý Honza. They came in and they really invested into our growth, into us being able to take more of the share of the Czech market. And then from there, you go Series A, B, C, D, etc., etc. So right now we're raising Series A. In these funding rounds, A, B, etc., and so forth, you only raise money to grow. So your product is done. You just keep making it better. Your core team is set. You just keep hiring more talent. Usually you're raising to expand into other markets. For example, that's what we're raising right now. We're raising Series A, and we're looking to use that money to expand into Europe.
Yeah. So in the beginning, it's for all the startup, it's more about, like sell the idea to the investors and getting traction, getting some interest from the potential customers.
Absolutely, because you can have the best idea in the world, right? But if nobody wants to buy it, you're not going to make any money with it. And it's really easier. It's much better to find it out, in the beginning rather than run it for a couple of years, bootstrap it yourself, and then realize, oh wait, actually nobody's going to buy this from me.
Can this take also, like you said, several years to shape this idea and to get to the point where you get like the first investment, or
absolutely.
Or do you need to be quick?
It can take a couple of years, absolutely. It usually means that you're not doing something right, but there have been massive success stories with products that have relaunched. Take your Airbnb, take your YouTube, Slack, or Dropbox. I think Dropbox is the most famous, success story with a lot of relaunches. I think they relaunched their initial product 4 or 6 times even before they, realized what it is that their customers want and what it is that they are going to do.
Did you do any major changes on your product in the past?
Yes, we did, mainly because of the regulation that came to European Union. So in the beginning, we worked with a little bit of a different business model. And then, we got told that that wasn't the right thing according to the law that, didn't exist before. Now crowdfunding law is coming to all of Europe. So we adapted that as soon as, we started working with the Czech National Bank. And that's the way that we work now under their supervision.
Okay. When you get Series A, you are looking to go abroad from Czech Republic. Do you have any particular countries in mind, or is it the whole Europe? And what do you want to achieve in the next phase?
Right. So we're looking at Central and Eastern Europe for sure, because this is where we see the most potential. First of all, us Central and Eastern Europeans, we are savers. We're nations of people that put their money to their accounts and just leave it there. Whereas, for example, US, there's a statistics I like to quote. In the US, in 2021, 51% of people or 55% of people participated in the stock market in one way or another. In Central Eastern Europe, this is 9%. So massive discrepancy. There's something, for example, that we would like to change. Another point for us is that we are invested in by Seedstarter, which is part of Erste Group. So we get to use their branding, on our marketing materials, on our website. And that creates a lot of trust between people and us, even people that don't know who we are yet, because they see the very trustworthy logo and they're like, okay, well, if these guys back them, then probably it's not a scam. So we are first looking at the countries with strong Erste Group presence. You have your Austria, Romania, Hungary, etc. And then we want to expand into the rest of Central and Eastern Europe. This should give us enough ground to then move to Central and then Western Europe and really get everything covered. We're not really looking at the US right now because of the difference in regulations. They have, first of all, it's really, really hard to go to US as a European fintech, and it's vice versa as well. That's why massive, American companies that do this in the US, this business model, they're not coming to our market.
Yes. Does it help you to have as a strong partner as Erste?
Absolutely, it's been invaluable. First of all, I mean, of course, they gave us money, which is a startup you really need.
But you need but they can offer much more. So it's
absolutely. And then second of all, it's not just about us using their branding, which really, really helped us in the beginning. When we launched our product without their branding, it was a lot about people investing a couple hundred or a couple thousand crowns and saying that they love our product. And we're like, yeah, okay, invest more then. And they're like, well, no, I'll see if you are still around in 4 or 6 months or in a year, and then maybe I'll invest more. But as soon as we slapped the Erste Group logo on that, people just instantly believe that this is a product that's here to stay. And the third and also a very, very important benefit of working with a CVC that belongs into something massive like Erste Group is we get access to their insights. We can use their knowledge base, and they have really been invaluable with advising us.
That's great. And when we look at your competition, do you have any? There's definitely competition around you. Do you have any fears from them, or how do you handle competition, and how do you keep it in your business strategies, and how do you react, or do you react at all, or you just go your own way and just check if they are not somewhere else?
You know what? I think we have a really, really healthy way of looking at competition. First of all, I think competition, moves you forward. It helps you, it pushes you forward, because the most important thing about having a healthy competition environment is that it is really good for the end user, right? Because there's different companies that are competing on multiple fronts, whether that's pricing, whether that's product, or customer service. It benefits the end user. So that's great because it pushes us to be better and better. But second of all, it also makes waking up and being motivated a little easier. Because you want to kick some ass, right? You want to be the best product. So you're looking at ways to improve yourself constantly. And obviously, from time to time, you glance at what the competition is doing, and you're like, hey, this is really cool. Maybe we can use that and turn it into something even better.
Mm-hmm. But you made mostly you go your own way and you have your own vision that you want to follow.
That is correct. Yes, mostly we have our own vision, and we believe, all the respect to the competitors that we have on the market, but we believe our product is better, and we want to keep focusing on that and keep bringing the best that we can to the customers.
Mm-hmm. Did you get some inspiration from competition, like in the beginnings when you were building the product and the functions and stuff like that?
But not competition here in Czech Republic or in Europe. We were mainly looking at American and UK companies.
Okay, so you took inspiration. So something like that already works there.
Yes, for many, many years, because the same regulation that we have, that is very new here, that has been here for half a year. They've had that since 2007-8.
Mm-hmm. And there are so many options to invest into stocks, into crypto, into retail, real estates. Why did you choose this real estates for Investtown? Or why did you didn't go in different ways? And why is it maybe better for investors to invest in this particularly?
I'm not going to say it's better for every investor to invest in Investtown particularly. I think, Investtown should be a part of every healthy portfolio, that I believe. It's a great tool to diversify. But, as with any other investing, you really don't want to put all your eggs in one basket. You want to diversify. That's what makes a great investor. Why we chose real estate is very simple, because, we are in Central and Eastern Europe. The market demand is, for safer haven investments like real estate. Again, I'm going to go back to the report that we have from Erste Group that says that 9% of people in Central and Eastern Europe invest, on the stock market. This is, first of all, because people don't believe that. They don't believe the providers of the investment, but they also don't believe the investment. In their minds, it's something, and this is luckily changing with the younger generations, but especially the older generation, in their mind, it's something that, may be or may not be there somewhere on the internet, in the air. Whereas real estate for them is like, yeah, I can go and look at that house. I believe that it is there and I trust that investment. Oftentimes when you talk to people here and you ask them about what they think is like a balanced investment portfolio, they will say, oh, I'm thinking that I should have like 15 apartments or houses and then rent them out. They don't picture, having stocks and bonds and ETFs and a crypto and a really good mix, a well-balanced risk of that. They just think of real estate as the pinnacle of investing. So that's why we started there.
Mm-hmm. Okay. But do you also advise your investors somehow in other investments, like okay, invest into us, but it's not the only thing you can invest in, or somehow educate them, because as an Investtown and as a provider of this service, do you feel some kind of responsibility for the money of your clients?
Obviously, yes, of course, absolutely. But, we don't really advise them to invest anywhere else. We say, yes, Investtown is a great part of your portfolio, but, we don't want to put ourselves in a position to tell them, oh, but also invest in stocks or also invest in crypto, because, you start giving, first of all, it's illegal for us to give out that advice, investment advice. Second of all, you start doing that, and then suddenly we take even a greater of a responsibility with people's money. As you mentioned, we really take great care of our customers when it comes to risk management. That's why our risk processes are immaculate. Our financial team is top level. But once I say to my customers that, hey, go invest in that, and it's something that I don't have control over, I'm putting them at risk, and I don't even have control over what's going to happen to that asset that I just recommended to them.
Mm-hmm. Okay. As you said, like you are choosing some real estate to invest it. You buy it, you rent it, and you give some part of the money to, or how it works.
No, so the way it works is you are a real estate developer and you want to build your real estate project. In the regular bank, when you're looking for funding, you're going to apply for a loan, and they're going to check your credit score and everything. And it takes a long time. In the best case scenario, you're looking at 4 to 7 months, right? And in real estate, more than anywhere in other businesses, time equals money. You know, you've got that project on the table and you want to build it now. You don't want to wait for somebody to swoop in and buy the lot, you know, or build it there instead of you, or, you know, the prices of materials going up and down constantly. You want to get going. And we cut down that process from 4 to 7 months to 3 days. We analyze everything in-house, and that's why people are coming to us to fund their project. So once we get a project on the table, it goes to our internal risk department. They analyze the project through and through. They analyze the financial health of the company that is trying to build their project. They use references from their past projects. And we really want to make sure that, you know, whatever we're putting on the platform, whatever gets through our risk department is of the highest quality, because we want to keep people's money safe. Once that goes through, you know, we put the project on the platform and then people can invest in it. When the project gets successfully funded, we take all of the money that people invested and we give it to the real estate developer for them to build that project, for them to make that happen for themselves. And they repay us on a monthly basis with interest, and we take those repayments and we split them between the people that invested.
Yeah. Okay. And how did you attract the first investors, or not investor, developers to kind of like use
In the
your
beginning, it was very
way?
hard. It was a fight, you know, because we were this no-name company that came in there like, hey, we are gonna fund your projects, and actually people are gonna fund your projects through us, and they're like, what does that even mean?
And it's like totally new.
It's a new concept here, right?
Yeah.
So, you know, in the beginning, it was a lot about our internal sales department. They did a great job in, you know, spreading the word and contacting most of the developers around that we were interested in working with. Nowadays, it's much easier. You know, they're still doing a great job, our sales, but nowadays it's much more about also people coming to us and being like, hey, you know, can you guys fund my project? So we got to the point where, you know, we have so many projects that we have to turn some of them away because we just don't have enough room to launch them.
Do you also help them somehow? Like you see the potentially good project, but it has some flaws, and you can help them to improve it?
No, that's all up to them.
It's all up to them.
Yes.
Okay.
The way that we try to do this is we pre-screen them. And, you know, if we see a project that has some problems or doesn't have great potential, then we decide not to fund that because, again, we want to keep people's money safe. You know, we are at 100% success rate so far. We had 0 defaults. All the projects are going strong, which, you know, is really a testament to how immaculate our risk department is.
Yeah, that's great. Congratulations on that. When I look at you personally, what's your typical day, and what's the life of COO of Investown? When you wake up, what happens?
Right. You know, that's actually funny because it's an anecdote that we have inside Investown. Is me and Alan, we are very, very different when it comes to this. He's a very early riser. He's the first person in the office by 5:30 in the morning. You know, he does his morning jogging and he's there and working. I like to keep working until late and then of course wake up later. So by the time I usually roll into the office, you know, people's days have already started. I start by checking in if there's anything urgent that is going on that I need to give my attention to. That always takes priority. You know, we try to organize our days and leave everyone to do their thing. But sometimes in a startup of this scale, we're still very small. You know, you have to jump from place to place because that is just more urgent right now. That needs my attention. So I'm going to dedicate time to that. Other than that, it's mainly about communicating with other heads of departments, you know, our sales, our marketing, legal, HR team, et cetera, and making sure that they're all aligned, that we are hitting the KPIs, seeing if there's anything I can do to help them. And if not, that's the part where I start focusing on more business development and looking for new opportunities that we can make money, that we can, you know, onboard more clients, that we can get more projects in, that we can better ourselves when it comes to product and so forth.
Mm-hmm. Do you have some specific criteria on new people when you hire new people? Like, is there something like about their personalities or set of skills?
That's a great question, and absolutely, the answer is very much yes. You know, our HR department is right now focused on hiring people that are mainly a cultural fit for us and that are very motivated. And, you know, going back to our initial conversation, the vision. People need to believe what we're doing. We are at a stage where, you know, we can finally pay people okay money, even as a startup. But, you know, it's still very important because the job, you know, the work to work in a startup is much harder than to work in a corporate. We're talking, you know, longer hours, more stress, more ownership for the tasks that you do. But it also comes with more rewards, right? We are looking for colleagues that have a mindset of being the co-owner of the company because of the shares that they are getting, the compensation, rather than just I'm here to do my job and then I'm going to leave. So our HR team has put together a screening process that is designed to identify the strong and weak suits of these candidates and make sure that they are a cultural and a motivational fit before we even check their skills. Right? Of course, it's very important to have very skilled people, and it's something that VCs really look at. Like who do you have in your team, and do they have the expertise to take this project all the way? But for us, you can always teach that last bit of skill. You can always teach that. But motivation and cultural fit and personality, you can't teach that. That needs to be a fit from the beginning. Otherwise, it's always a short-term collaboration.
Do you see any difference between people in London and here in Prague?
Yes. You know what? Prague is great when it comes to the startup scene now, and it's moving very, very fast forward. London is way more established. There's more money from the VCs to be thrown on, and mainly, there are American VCs that invest a lot in London because of the language barrier that is non-existent, between US and UK. So people there are more senior. They are expecting way more from their jobs when it comes to compensation, but also you don't have as many people that you need to teach what a startup is as here. And I'm not saying that this is a lot of cases, but it happened to us here that people come in with a certain set of expectations, and then they realize, oh, wait a minute, they are expecting me to stay later or work on the weekend and then take Monday and Tuesday off. I don't want to do that. I just want to do my 9 to 5 and go home and stop thinking about work. And that's not really how a startup works.
At the same time, you hire your own people, as you said. You want to motivate it. That doesn't matter the level of skills. You can teach that. But you also cooperate with Uplifting. Uplifting is your vendor and helps you in some ways. In what stage have you started thinking about getting someone from outside to help you?
When we really started ramping up our product needs, we thought, okay, so there's two options, right? Either you scale your own team or you go to an external company like we did, go to Uplifting. The main difference is, right now we are still too early of a stage to be like, okay, let's hire 5-6 more people for the product team, because we are not sure that we are going to have enough work for them constantly. We know that right now we really need to get this project done. We need to update the app, update the front end, the back end, make the user experience, the user interface more sexy, more appealing to the customers, and make the whole journey smoother. And that is very, very development heavy. But once that is done, that might die down a little bit, and the upkeep is not going to be as heavy on the personnel and as heavy on the time required, the manpower required. So in this case, an external vendor is a great option because it's very flexible. You can sort of lease people's time on a month-to-month, week-to-week even basis. So what it really helped us is we didn't have hiring costs, because hiring great development team members is really, really pricey. And especially these days after COVID, everybody works remotely, so you've got a massive talent pool and a really big hiring pool as well. So people get to choose where they want to go. It's not like they are going to jump at the first opportunity to get a job. So that goes back to selling your vision and finding people that really want to work on your product, not just people that want to make a bunch of money and that's it. So for us, this was the right way to go, and we're very happy with the results so far.
Yeah, great. So it's because I'm looking for a way how to describe maybe or figure out or help the other startups to how they think about it, because as you said, you need to hire people, or you want to hire people, but it's really risky for startups to hire people, and it takes a lot of time.
And it's really expensive.
You don't have that time. Time is money.
Time is money, yeah. And then on top of that, you have hiring costs, right? Like you need somebody full time that keeps hiring people. You need to send them to interviews, first with the HR and then second with your tech team. So you are taking CTO's time off of what he could be spending programming. Whereas when you're looking at body leasing agencies and shops, you have trained people coming in, and you just need to introduce them to your product. Yeah. You do that all at once rather than one by one as they keep coming when you hire them yourself.
What's your personal challenge now in this year? Let's say
we are raising Series A right now, so that's a challenge on its own. That takes up a lot of our time and a lot of sleepless nights. And then after that, we're looking to expand. As we mentioned before, we're looking to go abroad. We're looking to see if our infrastructure can, handle euro, if it can handle going, beyond the Czech borders. And then apart from that, we just really want to grow in a sustainable way. We want to make sure that we are not inflating the company too much, and we want to make sure that our employees are happy and satisfied, and our vision stays true to what we do.
Yeah, and I heard that yesterday you hit some big target. No?
Yes, that is correct. So as of today, officially over 1 billion crowns has been invested through Investown, which. It seems crazy to even say that. It's such a large number. It feels like yesterday that we were celebrating our first 100 millions, and that seemed like a huge milestone at the time, and it was, But now looking back, we've come such a way. So that it's a massive thanks to all of the team that works on Investown, because it's them making it happen, And obviously, a massive thanks to everybody that's invested, because people are putting their money into Investown. They're trusting us, and we don't take that lightly. So we are really going to try our best to keep that trust and to do everything that we can do to earn it.
I think it's a phenomenal number, and congratulations to
Thank
that.
you.
And keep working and keep motivated. And I think this is a nice way how to finish our podcast. So thank you very much for being here.
Thanks for having me. Thank you.
Yeah, thank you came. And for everyone, if you want to know more about Investown, visit their website. Or listen to some other episodes we have, and we'll be planning some more for the future. So keep listening, and thank you.
Thank you.